Hi, I'm Sam Meredith, and joining me today to discuss Singapore's economy is Jingyi Pan, economist from Forecast. So we've seen this week that the Monetary Authority of Singapore's core inflation gauge rose by 0.4% in July from a year earlier, which, although positive, comes at a time of growing uncertainty regarding the outlook for growth and prices. What is your assessment of the economy, and can we expect further monetary easing in the near future?
So on the assessment of the Singapore's economy, we actually see the country undergoing transformation towards a higher productivity and high value output, but it remains relatively strong amongst the Asian economies. And moving on with respect to the MAS decision, the Singapore Central Bank has actually kept quite a tight watch on the developments of the external events, and we have seen quite a flurry of this in 2015 so far. But as the MAS stated earlier this month in August, the current monetary policy stance remains appropriate from the overall macroeconomic perspective. And we too do not expect further easing in the near future. Meanwhile, the bank may be tempted to conduct easing for export competitiveness. It may conversely drive out capital and also raise borrowing costs. So as such, we think that the bank is likely to leave the policy unchanged, especially given the volatility surrounding Asian currencies at the moment.
The Singapore market tumbled by 4.3% on Monday, with losers overwhelmingly outnumbering gainers, and local shares were hit by deepening fears over China's economy. Is it simply a matter of time before Singapore's growth takes a hit if the current volatility persists?
So, certainly China's economy has put a lot of attention on the stock market, and we also see that the Singapore Stock Index has been mirroring the fall in the Shanghai Composite. But we also at the same time believe that the movements are mostly brought about by market speculation, and Singapore's growth fundamentals are pretty much intact, especially given the differentiation in high-value output. But beyond just the Asian trading partners, Singapore actually supplies a lot of high-value products to the EU and also the US, and with the latter actually showing signs of recovery, it's likely that we'll also see Singapore's growth get boosted as well.
Lastly, for today, which key indicators will you be looking out for that are likely to be significant to Singapore's economy in the short term?
Okay, so for key indicators wise, I think we are actually taking a close look at the industrial production, and it is actually likely to be a concern for the country and especially relevant for Singapore's non-oil domestic exports amidst the government's efforts to see the economy transform. But in regards to the recent developments above output-wise, it is also important for the market to actually keep a close watch on the formation of the new government and their stand on the path for Singapore's future development with the upcoming elections. And this current election that is coming up in September is also regarded to be a critical turning point by the current Prime Minister.
Thank you, Jingyi. Be sure to check back with Dugoscopy for more updates throughout the week. Goodbye for now.